However, here to teach and show, guide, educate, mentor, all that good stuff. Okay. I haven't done this in the last few days, so I'm going to do it now. Shamelessly plug my Facebook page. Thank you to all those that have already went out and liked me on Facebook. That's great. I appreciate it. That's really, really cool. If you haven't yet, well then, what are you waiting for? No, I joke. I try to post things on this page that little, setups that I'm looking to get into myself, things that are working, and different things like that. So I'd love if you went out there, like me on Facebook. There's a lot of people who don't use Facebook all that much, and I totally understand it. Don't use Facebook that much, but there's some students who go out and sign up for Facebook specifically just to like, me and Market Traders Institute and Josh and kind of follow us. It's a nice place to follow us, so that's cool. Luana says that's mean. Yeah, absolutely. So you don't have to go on Facebook and sit there and use it as a social platform and sit there and find long lost friends and all that kind of stuff. You can use it the way that a lot of people use it. They don't even put a picture on. They just sign up. They create a Facebook page and they go and like some of the people that they like. And it's a nice place to communicate with me. It's a nice place to follow kind of what's going on, and that's always good. Okay. All right. Put your thinking caps on, everybody. I got some really good news today. How many grid traders do we have in this room? Probably a lot. I know a lot of you have signed up. I've got some great, great, great news. It's good, but maybe not so great at the same time. I thought I was going to get in deep trouble last night. Come to find out, there was already plans by the executive team. They were laughing at me a little bit this morning. There was already plans from the executive team because it's the anniversary session. This week we have a bunch of students. A lot of the executives are running around. We have a bunch of students in the center. I'm in Florida, which is great. We are extending this to the next 50 students. We were going to limit it to 100. We already surpassed the 100 yesterday. I then came on and I thought I was breaking the rules, and we are going to extend another 50, which is actually a really, really good thing for a lot of you. For others, you've already signed up. That's awesome. Then you're already in. You have nothing to worry about. Rock and roll. Everything's great. For you that have not, well, good news. We've just thrown you a lifeline, and you're going to have another opportunity, but that opportunity is going to end soon. So, okay, let's dive in. All right. So I will talk about the Euro Aussie. I'm going to talk about a process today, because I think a process is so vitally important. And we're going to set up trades. I'm going to show you some of my favorite trades and the way that I plan on setting these trades up. But more important than that is a process, right? It's a process that, a systematic process that you need to follow. How many of you have a step-by-step formula that you follow every single trade? Type it in me. And if you don't, if you're like, oh, no, I know I don't. I know I should, but I don't follow the same exact formula all of the time. Derek says 90%. So that's, 90% is good, But, if you, let's say you try to swim across the lake and you make it 90% of the time, but 10% of the time you don't make it. Well, that's not good, is it? It's not good at all, right? 10% of the time I stop breathing. No. All right, let's get going. Okay, this is going to be about a process. I'm going to teach you guys a little bit of a newer formula today. It's not a new formula to me. It's actually a formula that I've used for years and years and years and years and years. And how many of you have heard me talk about my scorecarding process? I don't talk about it a lot. It's just I bring a scorecarding process to a lot of different things, and it's a way for me to kind of gauge which currencies, individual currencies, right, such as like the euro and the pound. Every time I look at a trade, the first thing that goes through my mind is, like for example, if somebody says, hey, I want to, let's go to the euro yen for a minute, right? So if somebody says, hey, I want to buy the euro yen, my mind automatically goes to a thought. And my thought is, okay, great. I'm gonna listen, and I'm gonna potentially say, hey, that's a really nice trade. That's awesome. That looks great. But what I'm also gonna say is this: if somebody's looking to buy the euro yen, what are they really trying to do? What they're really trying to do, and what they're really saying, is that the euro is going to get strong and the yen is going to get weak, right? Type it out. Why are you asking the question section if that makes sense? That's really what they're doing. And so my mind automatically, and I'll give you a little bit of the background and the reason why my mind works this way, but my mind automatically goes to, okay, that might be a great trade, but if we're saying the euro is going to get strong and the yen's going to get weak, well, what I want to do is I want to build that case a little better. I want to make sure that the euro is actually poised for strength against multiple currency pairs, not just the yen. And then I also want to make sure that the yen is poised for weakness against multiple currency pairs, not just the euro. And so I do a whole lot of analysis in pairing strength versus weakness. It's plays a really big part in my analysis. And I'm going to give you guys kind of a simplified formula today. And for grid traders, how you can tie it back to the grid, which is really, really cool. But that's kind of the way my mind works. And the reason my mind works that way is because I started trading in stocks. And when I started trading in stocks, and then I went to options and futures and currencies, when I started trading in stocks, what I found happening was I was buying stocks, and the market would go up, and maybe my stock would go up a little bit. But I'd hear about these other stocks. So let's say, I'll give you a hypothetical example. Let's say I buy a stock and my stock goes up 1%, over a week or something like that, or whatever. But I hear about another stock XYZ, that my buddy bought or somebody bought, that went up 7%. And I'm like, what in the world? Like, oh, okay, well, that's all right. They made more money than me. And worst case, another bad scenario would be I'd buy a stock and my stock would go down and somebody else would buy a stock and it'd go up, and vice versa. And it got me thinking. I'm like, why? It seemed like I was always, I analyzed the market well. I could understand where, stock prices and essentially where prices were going to be heading, but I seemed to never be in the right stock at the right time. And that then started my mind on a journey of saying, well, I'll give you an example. The scorecarding process that I used for many, many years was, if the market is going up, let's just say the stock market as an example, and we'll tie this to currencies in a second, but if the stock market is going up as a whole, then I need to be a buyer. And then I go into, there's 9 core sectors within the S&P 500. You got the materials, the energies, the financials, et cetera, et cetera. And so I would then say, okay, market's up. I want to then only focus on the sectors that are up, right? Because just because the market's up doesn't mean all 9 sectors are rising. For example, over the last couple of years, the market has went up, but energy stocks, or the energy sector, hasn't done all that well, relatively speaking, a few months ago, right? So I wanted to go and find the best sectors, and then within the best sectors, I wanted to find the best stocks. So I went and I started using that process in stocks, and then that's now correlated and moved into currencies. And so that's my whole thing. So I'm going to give you guys a little bit of a formula today that you can use. And this formula is essentially something that you can use in whatever strategy you have. Doesn't matter if you're a target trader, doesn't matter if you're a leveling student or mastermind or whatever, it doesn't matter. You can use the same type of formula. But really what it boils down to is this, and we'll go into some of these pairs here, but really what we're trying to ask ourselves and trying to answer is this. Number one, what direction is the market most likely to move in next? I have to be able to answer that question. I have to answer that question, and it's got to be very clear-cut. I have to have a very systematic, clear-cut way of answering this question. Now, what are some of the ways that we can define where the market's going to move next? Just go ahead and name some of them, right? I mean, we can use wave analysis. We can use trend lines. Yep. We can use fibs, higher highs, higher lows. That's trend 101. Pivots, We can use targets, right? All that kind of stuff. Support and resistance, moving averages, yeah. Yeah, so there's a lot of different ways, but we have to have a very clear-cut, very obvious way of defining where the market is most likely to move next. That's the first step. And I'm going to show you a very simple formula today that I'm going to tie into the grid. I think you're going to like this, and I think it's going to be powerful. And you can, again, use the same concept and tie it into whatever strategy you like, whether it be target or leveling or whatever strategy. Number two, after I understand with clear logic and have a very clear way of knowing where the direction or where the market should move in, which direction, then I need to say, where is the market most likely to move to? So after I know the direction, so for example, if I know the direction that it's most likely to move in is up, now I use the word most likely because we never know for sure, right? Like there is no guarantees in this business, but where is it most likely to move in what direction? And then once I have that, I've got to know, well, where is it most likely to move to? Because that kind of gives me my target area. And then number three, and just as important, where put it this way, at what price am I wrong? Say it another way, if I'll give you an example here. Let me draw this out. Let's say the market is moving like this, and I get long on a counter trend line break right here, and we've got the market that looks like this. Well, in this scenario, what I could do is I could say, okay, well, I think the market's moving up because we're putting in higher highs and higher lows. We've got this A, B, C, D sequence right here. So the direction is up. I believe we're moving to this 1618 extension up here. And if price is able to fall and break below this A right here, then I'm wrong. So this would answer all three questions. We're moving up to this level. My stop is at that level. Type in a wire, yes, if that makes sense. So those are the three core questions we have to ask ourselves every single time. No matter what strategy we use, no matter what type of trader we are, we have to answer those three questions first. And it's got to be based on very clear logic, very clear, a very clear strategy that you understand, that you get. And so this here, if I drew this picture, this here, and if this was a real market, this makes sense to everybody here, right? Okay, we're moving up because we're putting in higher highs, higher lows. We're in this up A, B, C, D. We got an A, B, C. We got a counter trend line break, which means that we're probably going to the 1618 extension because of the retracement. And we're wrong if we go down below the A. So it answers all those questions very clear. That's why I love Fibonacci's. That's why, at the core of the type of trader that I am a Fibonacci trader. But Fibonacci's are not the only way to define these, to kind of come up with and answer these three questions. It's not the only way at all. So what I'm going to do is I'm going to show you a strategy that I've used for a long time, that I still use in a lot of my decision making, not all of my decision making, but I still use it in a lot of my decision making, and one that you can maybe adopt today. I wouldn't recommend just throwing a bunch of new things at you, but it's in light of trying to answer these questions and to maximize my reward, I'm going to answer this question. But I'm going to show you the strategy. But here's another thing I do want to say. So I'm going to talk about how we can, let's say that this trade right here, let's say, we're wrong if it goes below here. This is where we think it's going up. And let's say that our profit potential, so up to our target is, let's say this is a 250 pip profit. 250 pip profit potential, right? 250 pips of profits expected. 250 pip profit if we hit that level, okay? And our stop down here is whatever it is. But let's say a trader just took this trade, put a stop down here and a target up here. What is the max amount of money that trader can make? What is the max number of pips that trader can make if they take this trade? 250 pips, right? If they follow this rule and they take one trade here, it's 250 pips. So after I show you one of the strategies that I love, and it's hopefully going to be a clear strategy, I'm going to show you the way that I recommend, no matter what strategy you use, if you can answer these three questions: which direction, where is it going to, and where am I wrong? I'm going to show you how I believe you should add the grid on every trade that you're currently in and every trade you take going forward. And I mean that. Because here's the deal. If I take this trade right here and I just have a target up here, my max profit is 250 pips. But what if instead, what if I take the trade right here, and I know that maybe this is a swing trade and it might take a little while to get up there. What if I do a grid? What if I do like a 25 pip grid and I go 4 spaces below price, my current level, and then 1, 2, 3, I go 3 levels below, and I go, let's say, a total of 4 above, right? And I place this grid, and it would actually be wider than this. It would be like this. I place a grid, and I say, okay, well, I'm not just going to take the original buy. I'm going to, because I know the market moves in waves, right? I know it doesn't just automatically go up, and I don't expect it to just automatically go up to my target. So what I'm going to do is I'm going to place these grids. And what this means is this: every time I know I'm going to trade it the same way that the normal trader would trade it. But what I'm going to do is every time price, I'll add a few more grids up here. I'll say every time price hits one of these lines here, I'm going to buy. Right? So if price goes like this, and so I buy right here, that's my initial trade. And then let's say price comes down like this, and then it goes up like that, let's say. And each one of these grids are 25 pips. And let's say that I set a grid up and I say 25 pip grid. And I'm going to explain this. I'll show you this in live markets. 25 pip grid with a 250 pip target. Okay, so what does this mean? Well, if price then, if the normal trader got long here, target here, stop here, well, their profit potential is 250 pips. Well, the grid trader's profit potential is 250 pips also. But they got long here, and long here. And so now the grid trader is in 1, 2, 3 trades. So if it rallies up, let's say here, each one of these grids, as an example, well, this is going to be more than 250 pips, but let's say each one of these grids, for example, is 25 pips. Well, this trader is up 25, 50, 75, 100. That trade right there is plus 100, right? Plus 100. Okay, so that's plus 100. This trade right here is plus 75. And this trade right here is plus 50. Type in a wire yes if that makes some sense so far. So now if I think about this, because I used the grid, oh, and by the way, I forgot to mention I went long again right here, right? Because every place below and above I go long. So when price reaches this point right here, this trade right here, this original trade is up 50. This second trade's up 75. This trade's up 100, and this trade right here is up 25. So let me just ask, what is my total profit on this trade over this whole trade sequence so far when it gets to here? My total profit is 250 pips. So the grid trader, we've not even gone halfway up to our target, and the grid trader has already made 250 pips. Now what the grid trader does is takes the 250 pip profit and then reestablishes the grid. And then let's say now the market continues to kind of wave like this, and it finally goes up to the target, right? Well, how did the grid trader do? Well, the grid trader got long here. So it made 250 pips on this first sequence here. Then it got long here, long here, long here, long here. Let's just see how it's doing so far. So from this, after it gets up to about here, that's up. That would be 25, 50, that would be 75 pips. So let's just do this math here. That'd be 75 on that one. It'd be 100 on that. I'm going to say if we get up to this level right here, 70, so 1, 2, 3, 75 right here, 100 there, 50 there, and 25 there. So that by the time we get up to this level right here, 1, 2, 3, this level right here, we've got another 250 pips, the grid trader. So this right here was one trade sequence that booked 250 pips. And this right here was one sequence that booked 250 pips. We're still in the trade, and let's say it continues to rally higher. Okay, so now you get long again right here. You get long again right here. So this trade makes 50 pips. This trade makes 75 pips. So 50 here. I'm sorry, 50 here, 25 here. So now, and again, I'm going to show this on the live market, but what all this means is, let me group these together. So this is one sequence right here. That would have made 250 pips right here. That's a 250 pips sequence. And this would have been a 250 pip sequence. And then this would have been a 75 pip sequence. So the grid trader, how much did the grid trader make? 250, 500, 575. Grid trader made 575 pips. How much did the normal trader make? How much did the typical trader who bought and had the target? Now they did well, right? They went up, they hit their targets. They're happy. They made 200. They made money, but the normal trader only made 250 pips. Type in a wire yes if you're starting to see if that's like, wow, okay, all right, I'm starting to see the power of this. It's the same exact trade, yet it's utilizing the waves within the market while it goes up to your target. It is honestly one of the greatest swing trading methods I've ever seen developed. It doesn't change the way that I trade. I want to make sure everybody understands this. It's not going to change the trades that I take. Target traders, leveling students, you're going to take the same exact trades. You're just going to manage them in a different way, and you're going to be able to. This is the way that you need to kind of think about this. If you place a trade that offers, let's say, 200 pips of profit potential, 250 pips of profit potential, your overall profit on that, if you use the grid, should be anywhere from 2, 3 to maybe even 4 or 5 times your profit that you would get if you use the grid. So if you use the grid, you're talking a minimum of 2 to 5 times the profit than a normal trade, because of the way that you're managing the trade, because of the way that you're taking advantage of the waves, and you're booking the profits, so we would have had a 250 pip sequence right here, right there. You would have made 250 pips. You would have reestablished the grid. Right here, you would have made 250 pips. You would have reestablished the grid. Right here, you would have made 75 pips, and now you hit your overall profit, and you're done. You're done. All right? So, okay. So let's keep these 3 things in mind. Which direction is the market most likely to move in? Where is it most likely to move to? And at what price am I wrong? All right, so I'm going to show you my typical technique, and this is the technique that I use 90% of the time. And then I'm going to show you a systematic technique that's probably going to be a little easier for you guys. Maybe some of you don't have a core strategy yet that you really follow all that often. Well, I'll show you something that you can maybe adopt. All right, so right in here, the pound cat is one of my current favorite setups. If I'm looking at this, if I'm thinking about the 3 questions, which is number 1, what direction? So to answer question number 1, what direction are we most likely to move in if I'm looking at this right here? I'm going to show you a swing trade here. Sell, right? I mean, because, you know, if we're paying attention and if we're really thinking about the way the market moves, and it moves in A, B, C, D wave formats, right? So we've got to believe that, you know, we've got a deep retracement, an 8-6 retracement, but we've got to believe that eventually this is going to go A, B, C, D. Now, when can we forecast our C is in place? What is a good technique or a good method to use to forecast where a C is possibly going to be? Well, you can bring in what's called the minor fibs, right? There's fib sequences that create that C retracement within a longer term C, or within a longer term AB down. So this is a longer term AB down. We then got this, we're looking for our C, and within this movement looking for the C, we also create what's called minor fibs right here, right? This is a minor fib. This is the major, this is a minor. So within this minor fib, what do we see that's interesting about this minor fib? Does anybody notice something? What do we know? What do we know about the markets, and what do we know about how the market waves? Yeah, it's this AB sequence has hit a D extension. We've put in our new, technically we haven't established our B yet, but we will eventually very soon establish a B, and there's a lot of reasons to believe that because our last low price was established 1, 2, 3, 4, 5, 6, 7, 8, 9 bars ago. Does anybody think that we're due to establish a real high price from this last low price? We're 9 bars into this move, 9 daily bars into this move. Yeah. Yes. The answer is yes, absolutely. You combine the fact that we're 9 daily bars into the move from the last low price without establishing a high price. You combine that with the fact that we have this down daily AB and we have an up AB that hit an extension that should be looking for a 382 retracement. Does everybody understand and see why it's probably a smart thing to do to start looking at shorts? Yeah, absolutely. This is one of my favorite trades. This is one of my favorite trades, one of my heaviest trades right now that I have in the markets. Because of everything that's happening right now, everything that's going on, the fact that we're in this down AB, just this down AB tells me we probably need to start thinking about selling. So let's think about this. We have this down AB with a retracement. We have this minor up AB that is forming what's going to be the ABC. And we are 9 bars into a move since the last low price. This is the last low price, 2 bars to the left, 2 bars to the right. Since this low price, we have not formed a new high price. There's something that's called the 7 to 11 rule. The market will form new highs and new lows most of the time, and this works on oscillators and indicators too, within 7 to 11 bars. It typically won't go over 7 to 11 bars. We're 9 bars in since the last low price, which means the market is overextended and should be forming a high price very, very soon. Last but not least, yes or no, are we at a high price? Relatively speaking, if we're looking at this right here, are we, yes or no, at a high price? Yes, we are. Yeah, we're in a deep C with a minor up AB without a retracement. This is a perfect indication of a substantially overbought market that's due for a retracement. Now, I'm not saying that this thing is going to just crater down. I'm not saying that. But I am saying it's due for a retracement down to 67.26. That's what I'm saying. Okay, so we've got our direction. So if we're thinking about the 3 steps that we go through, number 1, direction, right? So I'm going to ask, I've got 435 people in here. Which direction should we be looking to trade the pound cat in? We should be looking to short. We should be looking to short to, and the most conservative place to short to is down to this retracement level. That's the most conservative place. Okay, so our direction is down. So the second question is where to? Well, down to the 382. Okay, where are we going to be wrong? If price continues to rally, where is our, you know what, looks like we're going to be wrong level? Above the A, right? If we break above this A, then we're wrong. We're wrong. So this is my price that I'm going to be wrong at. Like I'm like, okay, well, I'm wrong. This is the price that I think we're going to, and we're going down. So here's So I'm going to keep it that simple. I am looking to short, I am currently short and looking to continue to short the pound CAD down to 67.26. And my wrong price is, I'm going to be wrong if we get above 75.90. So that means from current price, I'm looking for about 560 pips of profit. 560 pips of profit. Now here's the way that I'm going to recommend everybody, once we answer those three questions, here's the way that I'm going to recommend placing, and the way that I'm going to be placing most, if not all of my trades going forward, is using Josh's grid formula. Now let me show you this. Josh's grid formula, and then I'm going to show you this on multiple pairs, okay? It's multiple pairs. So let's go to the pound CAD, and I'm going to show you this on a 1 hour. This is more of a swing trading method. All right, so I established my direction on the daily chart. So we're moving down to this level, and I'm wrong if we get above this level. So I know all that. That's good stuff. That's all the stuff I need to know. So what I'm going to do now is I'm going to now go to the 1 hour chart and establish a grid. But before I do, I'm going to link these levels. I'm going to link this level here and this level here to my 1 hour. I'm going to link those levels. So we're moving down to this level. My stop's going to be at that level. Now here's the grid formula. And by the way, this grid formula works. Josh has created what's called a no-brainer strategy, meaning regardless of kind of what you do and what you set it on, this thing has about a 90% success rate, what I'm about ready to show you. But I'm not going to trade it the no-brainer way, because trading it the no-brainer way, well, I'm a professional trader. I should be able to get the odds in my favor of which direction we should be moving in. I should be able to forecast where the market's moving to, etc. So here's the formula, though. It's a 6-step formula. It's actually, you don't even really need to go into all 6, but really what I want to do is I want to pull up a 1 hour chart. I use a combination. I'm going to be using a combination of a daily and a 1 hour for my swing trades. I've used that for many years. And here's the 6 steps. Number 1, I need to make sure I'm on a 1 hour chart with 500 bars. The reason 500 bars is because it represents about 1 week's worth of price action, about 1 week. That's step number 1. Step number 2, I measure the distance of the 500 bars. This is all 500 bars, the distance from the low price to the high price, which is approximately 820 pips. I'm going to round that to about 820 pips. So that's the distance. That's number 2. Or that's technically, I mark number 2, 3. All right, then after I measure that 820 pips, I take 820 times 3, which is 2460. So let me write, so measure the distance of 500 bars, distance between the high and low of the last 500 bars. Take that total times 3. Take that total times 3. Divide that total by 2, and then divide that total by 10. Okay, so we had 820. So this number here was 820. Times that by 3, that number there is 2460. Divide that by 2, that number is 1223. Divide that by 10, that number is 122.3. All right, type in a wire yes if that makes sense. Or 123, I'm sorry, 123. All right, so 123, that is my grid size. So that number right there tells me how far apart I need to place my grid entries. That's what it tells me. So I have a choice. I can take this trade and I can short with a target of about 560 pips and I can just call it a day. Or I can use the grid like I showed you in the example and I can turn this 560 pips into, well, into a lot more. Yeah, let me, for some reason, here, let me do that again. It was 800. All right, let me do that one more time. 820 times 3 divided by 2 divided by 10. Yeah, 123. Okay. So that tells me the distance of the grids. So I have a choice. I can just short this down to here with a stop there, or I can use the grid. I can use the grid to double, triple, quadruple my profit potential by using the grid. And so here's how I'm going to do it. I'm going to go and I'm going to use the matrix. And I'm going to pull up the matrix tool and I'm going to say I want to have 10 grids both above the market and below the market, meaning I'm going to buy and I'm going to sell. And then what I'm going to do is this, is I'm going to say sell. And now I have a choice. I have a choice where I could say my overall stop is going to be, and I know this, it's going to be 75.90. I know that's where my stop's going to be. And I know where my target's going to be 167.26. Now I could just stop right there and I could say, okay, my grid size is, it needs to be 123. I could just stop right there and it would put in all the grids and it would trade it. It would continue to trade all the grids down here and it wouldn't manage this trade. Or what I could do is I could click on this, close all positions and reestablish. When this gets a net 120, I'm sorry, when this gets a net 560 pips, because that's my overall target, when this gets a net 560 pips in the trade, then close it. So what could happen is we could get into some grids and by the time it's about halfway through, it could have 560 pips overall in, close the grid, lock in my profits, reestablish the grid. Type it a wire yes if that makes sense. But I want to keep this clean. Because if I'm really trying to go after 560 pips, then this is the right way to establish it. If I'm really making a choice, the choice is, do I just trade this like this and have 560 pips of profit in here, or do I trade this with the grid where literally we might not even have to go down, we might only have to go down a quarter of the way to my target and I could get 560 pips. And I could actually end up getting 560 pips 2 or 3 times by the time we get down there. So the right way to trade this would be like this. 123, sell, close at 560 pips, because that's my overall target. My stop is 75.90. My target is 167.26. So now, in a count of 3, I'm going to hit OK. In the count of 3, I'm going to hit OK, and you're going to see that all of these will be established. So I'm selling. I'm going to sell both sides. 123 is going to be my pip range for my grid. 1, 2, 3. Done. Done. Now, if I think about this, what if price goes like this? Each one of these grids is 123 pips, right? So what if price does this? What if price rallies up, almost stops me out, but then falls like that? Well, let's just do the math here. This trade here, if that happens, because I sold here, here, and here, this trade here would be up 370 pips, so 370. This trade here would be up 240 pips, 240, and basically I would basically already have my target, even if we hit 240, basically right about in this area, right about in here, I would have my 560 pip target, right about in there. Type a wire yes in the question section if you understand that. If this is the price action, I would establish a 560 pip target there. I would reestablish the grid I'm basically back to break even and I already made 560 pips. Reestablish the grid and do the same exact thing. And by the time it moves down to my level, I could actually end up with like 560 pip targets. Does that make sense? I can trade it like if my overall target here is 560 pips. So I'm going to turn 560 pips into 1,000, 1,500, maybe even 2,000 pips just by establishing it this way. We know where it's going and we know what direction it's moving in and we know where it shouldn't go to. And as long as it stays within this area that we think it's going to, let's trade this like let's trade the grids using the formula all the way down to that level. And so if it went through this motion, here's what would happen. We would have hit a target there. We would have then shorted here. Let's see what would be up. We'd be up 250. All right, so we wouldn't quite have it. So right here, if we get down here, it'd be 320 plus 190. What's 320 plus 190 plus? So right about here, we would have another 560 pip win right there. Boom. Then what would happen? So we got 560, 560, then we'd short again, short again, short again, and we'd have, by the time we get down here, we'd have another 560 right about here. And then we'd short again here for the last time, and this last move would make right around 60 pips. So this trade, if you traded it like this and it went through that price action, you'd have 560 pips, 1, 2 times, times 2, and then you'd make about 65 pips on this last trade. No, I'm sorry, 3 times. So 560 pips, 3 times, one right here with these 3, one right here with these 3, or with those 2. Well, you actually would have 3. One right here with those 3. So times 3, so 560 pips, you'd hit 3 times, plus about 65 pips on the last trade. You'd end up making about 1,700 pips on the same exact trade that this trader sat in for the whole time and only made 560 pips. So you tell me which one's better. Honestly, if we know the direction the market's moving in, and we know where it shouldn't move to, and we know where it should move to, why in the world would I not trade this way? Now, I need to pause for a second. Type in a Y or a yes or a me or a wow or a yippee or whatever if you're understanding this. I got to tell you, this is amazing, guys. I mean this when I say this. I honestly believe that there isn't one trade that you guys have on right now, unless for some reason you don't have a direction, you don't have a target, and you don't have a stop, then I can't help you. If you don't have a target, a direction, and a stop, then I can't help you. I'm sorry. But if you have a direction, a target, and a stop, every one of your trades that you have on should be traded with the grid. Every one of them. All of them. So this is the way to trade. Right here. This is it. All right. So this is actually one of my favorite trades, the pound CAD. Just so you're aware. This is one of my this is one of my favorite trades. I'm in this trade. I like it. I'm going to continue to be in it. And if you're wondering how I'm going to trade it, this is how I'm going to trade it. This is how I'm going to trade it. Okay. So what I'm about to show you is a strategy, again, that I've used for a while, for a long time. In fact, I kind of started my career as a professional trader and actually became very profitable using the strategy I'm going to show you right now. I still use it quite often. I verify what's going on in this a lot. I'll give you an example of the pound CAD, one of the other reasons why I like it in a second. But how many of you saw the video that I posted on Facebook when I talked about moving averages and Keltner channels? Did anybody watch that video? Okay. Now, you don't necessarily need to watch it. I don't want to confuse any of you. Some of you in here you love target traders, or targets. I love targets. Some of you are leveling students and basket traders and all that. If you already have a style of trading, then stick with that and just use the grid. Just the whole point of this is every trade that has a direction, an entry, and a stop, trade the grid. Trade the grid, okay? So what I'm going to show you though is a formula that you can maybe adopt if you don't have a formula. Okay, let me see if I can explain this to you. All right, so what do we know about the market? Or what do we need to know about the market? Well, we need to have a clear-cut way to define a direction, right? We need to have a clear-cut way to define a place it's heading to, and a clear-cut way to define a place that we're wrong. So we also need to know, I am more of a trend trader. That's the reason why when I trade with the grid, I'm not going to just do the no-brainer method and just set it up. I'm going to trade with a clear direction. I'm going to have a defined direction because I'm a trend trader. And as a trend trader, and I would say most of you define yourself as a trend trader. I'm a trend trader. And so as a trend trader, I'm going to only establish the grid in the direction of the actual trends. Now, there's got to be very clear-cut, simple ways to define a trend. And one of the clear-cut, very simple ways, and actually pretty profitable ways to define a trend is to use a 200-period daily simple moving average. Very, very simple. So what you see here, this black line right here, is the 200-period daily simple moving average. It's very easy, very clear. The way I look at this, the way I've looked at this for many, many years is if price is below the 200 period, we're in a downtrend. If price is closing below the 200 period, it's that simple. Price below the 200 period moving average, we're in a downtrend. Price above the 200 period moving average, we're in an uptrend. Type in a wire, yes, that makes sense. Okay. Second, the second thing I use, and this isn't the only thing I use to define a quality of a trend or anything like that, but as a trend trader, I want to understand, I've got to understand not all trends are created equal. There's some trends, first of all, there's always a trend, right? Price is always either above or below the 200 period moving average. Yeah, I guess every once in a while, like literally like maybe like 0.001%, it could be right on the moving average, but it's either above it or below it, right? I mean, that's pretty much the case. So there's always more of a trend. And so if there's always a trend, it doesn't necessarily mean that there's always a quality trend, right? So one of the ways that I define a quality trend is I use what's called a Keltner channel. Keltner channel is a very simple indicator. It's, again, this is just derived by price. That's all it is, the Keltner channel. And my settings on the Keltner channel are a 21 period daily moving average. And the question you might be asking is why 21 days? 21 days represents fairly decently, represents a month's worth of price action, not quite a month's worth of price action, but pretty close. And it's also a Fibonacci number. So I use a 21 period daily moving average. And the Keltner channel, I put 1.5 ATR, so average distance it moves above price, and 1.5 ATRs below price. That's all Keltner channel does. That's it. You don't even really need to know all that information. Really, all you need to know is this. When price is below the 200 period moving average, and that both Keltner channels are below the 200 period moving average, that is a high quality downtrending market. Type in a wire yes if that makes sense. That's all you really need to know. If, on the other hand, price is above the 200 period moving average and both Keltner bands are above the 200 period moving average, that is a high quality uptrending market. It's that simple. Okay, so what we're trying to do as traders is we're trying to define the trend. We're trying to define the quality of the trend. And then what we want to do is if we say, okay, we're in a downtrend because we're below the 200 period, it's a high quality downtrend because both channels are below the 200 period. Well, then what is our job? Our job is to short or sell at a high price, right? So if you're in a downtrend, in a high quality downtrend, then your job is to sell at a high price. Type in a wire yes if you agree. That's my job. Sell at a high price. And continue to sell at a high price as long as you're in a downtrend, a high quality downtrend. That's it. So how do you know, how do you define whether you're at a high price or not? Well, you can use the Keltner channel extremes. So if we're below the 200 period, both channels are below the 200 period, an indication of an overbought market is when the price closes above the extreme high band of the Keltner channel. Like right in here, type it a Y or yes if you can see both channels below the 200 period, price below the 200 period, price starts to close above the extreme high of the upper Keltner channel. That is an indication of an overbought market. It's a great indication of an overbought market. When that happens, what we do is we can wait for price to then close back into the Keltner channels. As long as price is still below the 200 period and both bands are below the 200 period, if it closes and you can target the opposite side of the Keltner channel. So for example, this right here would be an example of a great short. Type in a Y or yes if that makes some sense. Okay. Let me see if I can find this right here. If you're wondering what about on the upside, this right here would be a perfect example of a long. Right here. Below, both Keltner channels are outside of the 200 period. Price is still above the 200 period. Right here, long position. Make sense? Everybody following so far? All right. So, here's the deal. What do we have going on right now? Right here, right now. What's happening? Can anybody tell me what's happening? There's current price. Well, what do you know? Are we in a downtrend? Are we in a high quality downtrend? Are we overbought in a high quality downtrend? Yes, 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 and yes. Okay. Where is price once we close inside of the, back into the Keltner channel, where is price most likely to head? It's got a very, very high probability. If you do some testing on this, you'll see very high probability of when it's in this environment and it closes into the Keltner channel, back into the Keltner channel, it has a very high probability of going to the other side of the Keltner channel. It's called mean revision. The market will float between extremes on both sides. So chances are, if and when we get a close back into the Keltner channel, chances are we're going down to 139.46. Because that, right up in here, you can see blue Keltner channel, 139.46. Type in a Y or yes, that makes sense. Okay. So we've answered two questions, right? And we've answered way more than two questions. One, we're in a downtrend. Two, we're in a high quality downtrend. Three, we're overbought. And four, we know when we get a close inside of the Keltner channel, we know where we should most likely be heading, which is to the opposite side of the Keltner channel. Now let's say that today is the day, for some reason, today or tomorrow is the day that we close inside of the Keltner channel. Now I need to know a place where I can place my stop. Right? Where can I place a stop? Where am I wrong? Well, technically, what I can say where I'm wrong is one of the easiest ways to do it is you can go above the 200 period. Or another way to do it is use support and resistance. When I'm selling, use the closest level of resistance above the 200 period. Closest level of resistance above the 200 period. Type in a Y or yes if that makes sense. Guys, this is genius stuff here. I'm telling you, hopefully you guys are taking some notes. Maybe I'll do some special sessions for grid traders on this, but this is good stuff. All right. So now, if and when we close inside of the Keltner channel, we know we should be heading down here and we should not get above here. That is the closest level of resistance above the 200 period moving average. So now what do? Here's what I do. As a grid trader that has just adopted the grid trading method, I've not been a grid trader up to this point. But now, because of the stats that I know, it makes absolutely zero sense for me not to place this trade on grid. I know that we should be heading down. right? And we should be heading down, and my over, if I just shorted, let's say I shorted right now, let's say we closed inside the Keltner channel, hypothetically speaking right now. Well, this trade has 322 pips worth of profit. So I could short it now and you know, make 322 pips, or better yet, isn't it better for me to make the grid? Isn't it better for me to establish the grid? Let's establish a grid. So let's use the formula. I go from low to high, whoops. Man. Low to high. It's about 395 pips. I'm going to take 395 times 3 divided by 2 divided by 10. My grid needs to be 59 pips wide. Where does my grid need to be established? What range does my grid need to be established from? Type in a wire yes in the question section if you understand that my grid needs to be established within this area. All right, so watch this. I know the formula. My grid needs to be 59 pips. Is that right? Yep, 59 pips. I'm going to do 10 pips or 10 grids above and below because I'm confident in the move. I'm going to sell. My stop loss is going to be 144.69. My target's going to be 139.46, which is the lower Keltner channel. And my target, what did I say my target level was? My target level is what, 320 pips? So what I'm going to say is I'm going to establish new grids every time I get 320 pips in the trade of profit. I'm going to close it, establish a new grid. Type in a wire yes if that all makes sense. You guys following? Okay. So now 1, 2, 3, done. How many times could price wave up and down and keep me in this trade before it goes down and hits my target? I don't know, 2, 3, 4, 5 times, right? So I could turn this 320 pips of profit that I'm looking for, just trading it my normal way, I could turn this probably into about 1,000, 1,500, 2,000 pips of profit. Type in a wire yes if that makes sense. Guys, this is brilliant. Brilliant. Okay. You guys want to see another trade? Watch how fast this is. Watch how easy this is. So let's go. Aussie, New Zealand. Anybody notice anything about the Aussie, New Zealand? You notice something interesting? Yeah, well, we're in an uptrend because we're above the 200 period. We're in a high quality uptrend because the Keltner channels are above it, and we've got to close beyond the band. And now today, what are we doing? We're closing inside of the band. So our target here is going to be up here. Our target's going to be 109.10. And I'm going to, we can say the lowest level below, the lowest support level below the moving average. I'm not going to go that deep with a move like this. I'm not going that deep. That's too wide. So I'm going to go to the closest level of support and trust that level for this one. So my stop's going to be there. Another way you can do it is you can just establish your stop below the low that closed outside of the Keltner channel. But I'm just going to establish my stop at this level right here. I could also establish it, well, to make this easy, just establish it at the first level of support or resistance. So that's the first level of support. You just make it easy. Okay, so now let's establish the grid. So let's go to the 1 hour, 500 bars. We'll go Aussie, New Zealand. Let's use the formula. Okay, so we believe it's moving up to that level there. Our stop level is going to be there. Our grid size needs to be, we got 325 pips. So I take 325 times 325 times 3. Man, this mouse, I'll tell you what. Divide that by 2, divide that by 10. My grid needs to be 49 pips wide. So I'm going to go to the matrix. I'm going to pull this up. I'm going to say 49 pips. I'm going to do both sides. I'm going to buy. I'm going to close it with, what's my overall target? My overall target's about 265 pips, right? 265 pips. So I'm going to close it all at 265 pips. My stop is going to be 1.0605. My target's going to be 1.0910. Everything looks good. Bam, done. Carol says that's good stuff. Type it to me if you think this is good stuff. Done. All right, so real quick, I've got 50 of these left. The executives have told me that they're going to allow 50 more students. If you're not a grid trader, if you don't have this in your hands, and you're not a grid trader, I'm going to go through the details here in a second, but all I want you to do right now, and I'll go through the details in about 10, 15 minutes, type in your phone number with the word me. If you're already a grid trader, I'll see if I can, maybe do some special sessions or something like that. I'll kind of teach you this entry. If you're a target trader, just use targets. Just use targets. If you're a leveling student, if you're a mastermind, use Josh's direction tracker and all that. If you don't have the grid, because the main thing about this, this is just an idea of how to establish direction, area the market's going to, and a stop level. So every trade that you guys put on, and you might have trades right now that where you have a direction, you have a level we think we're going to, and you have a stop level. You need to place the grid on every single one of those trades. Use the formula. It's very important. Use the formula. So if you're not a grid trader, again, I'll go through all the details here in about 10, 15 minutes or so. All I want you to do is type in your phone number with the word me. I'll give you all the details here at the end. But I've been told we only have 50. We're adding 50 more. So there's two things. Because it's the anniversary session, the executives told me we're adding 50 more. Or if those 50 don't go, then this will be done by the end of this week because it's our anniversary week. So if I were you, I would jump in front of the line. I would say, listen, I want to make sure that I don't miss out on this, and I want to make sure that I get the bonuses. You might be wondering what happens after the 50 are gone. Well, what happens after the 50 are gone is the price is going to go up, plus we're going to go to a subscription model for the grid. So the first 150 students, because we added 50, the first 150 will get the grid. Once you purchase it one time, you'll get it for life. You'll never have to buy or subscribe to it. You'll never have to pay another fee for it. You'll get it forever. The students after that, you're going to have to pay a lump sum fee up front and then pay a monthly fee, a subscription, or a maintenance fee going forward, which is fine. But you know what? For me, listen, it would be something that I would say, I want to get into my hands and never have to pay a maintenance fee ever again for it. That would be me. So if I were you, I would just simply type my number in with the word me. I'll go through all the details at the end. And I would say, listen, I want to be on record, at least be on record, to be one of the 50 potentially to get this for life if I decide to go into it. Now, I do have to say this fast. If you type in your number with the word me, it does not mean that you're automatically signing up. Doesn't mean we're charging you. It just means, listen, if you get this in your hands, you want the bonuses, you want to be entitled to those. And if we can work this out, whether it be payments or whatever it might be, then you want to make sure that you get it for life and you don't have to subscribe to it on a monthly basis, because that's going to end up costing you way more money for something you're going to use probably for the rest of your life. Okay? Okay. You guys want to see two more? You want to see two more real quick? All right, sure. All right. Two more. And again, this is not to change your guys' style of trading. If you're a target trader, trade targets. First of all, does anybody see what happened right here? What happened there? What happened here? What happened here? You guys see this? Are you seeing what I'm saying? Like, is this starting to kind of jump off the page for you? High quality trend. High quality trend. High quality trend. Yeah, okay. So, what are we doing right now? Well, first of all, we're not doing anything. What we need to have first is we need to have the price close beyond the upper Keltner channel. We're in a downtrend, in a high quality downtrend. But we need to wait for price to close beyond the Keltner channel first. And so if today doesn't close above 107.45, then we don't have any trade. If today does close above 107.45, that's your alert. Now you're waiting for the next daily close inside of the Keltner channel. You're going to target the bottom side of the Keltner channel and put your stop above the next, above the last resistance. Type in a wire yes if that makes sense. So there's really not a trade yet, but there's one that's about ready to set up. We got to wait for a close above the high to establish a true high price or an overbought price. Then the next day needs, or within the next few days, needs to close inside of the bands. Target down here, stop above the most recent level of resistance. So I wish I could show you another example. I can't. In fact, these two examples right here, these two examples right here are the only two examples on a daily chart, which is more of swing trades, that are currently present. These trades. Aussie New Zealand long, which is going to be verified and valid after today's close. If we close within the Keltner channel, it's good to go. Euro Aussie, technically, I just got a question. Technically, if you're using this type of strategy, technically, are you getting into this trade right now, or do you have something you need to wait for technically? Technically, we know we're in a high quality downtrend. That's all good. But technically, the highest probability trade is going to come when we get a close back inside the band. Okay. My moving average is 200 period daily. The Keltner channel is a 21 period with a 1.5 standard or ATR above and below. All right, you guys want to see a swing trade real fast? I think you'll like this. Okay. And then if you like this method, you know what I'll do? For those man, they're probably gonna get pissed at me, but here's what I'll do. If you decide to go into the grid today, I'm only gonna do this for today, but if you decide to go to the grid today, I'm gonna give your education specialist the workspaces for this and my swing trading settings, so they can send that to you and you can have that. So I will do that for the people that go into the grid today. So if you want to use this, you can. You don't have to set it up yourself. It'll just be set up for you, okay? All right, here's a swing trade. Let me see here. Hold on 1 second. I'm going to reestablish something. Give me a second here. I apologize. I'll be right back. Okay. All right. Okay. So some settings make sense to use the same. So I'm really particular about indicator settings. I don't use a whole lot of indicators. I'm not a big fan of indicators, and I don't use a whole lot of them, and I'm really particular about indicator settings. because a 21-day Keltner channel makes sense, logically makes sense, because it represents about a month, give or take about a month's worth of price action on the daily chart. But let me ask, does a 21 period on a weekly chart, does a 21 period Keltner chart, does that represent anything other than being a Fibonacci number? It doesn't. It doesn't represent really anything. And so it's important for me, I'm very particular about this. I believe indicators, for the most part, not all, like the 200 period is going to stay the 200 period, but most of the time we need to change the indicator settings if we change the time frames to something that actually makes sense, that's logical to that time frame. And what's a logical period to that time frame? To a weekly. So I'm going to show you a position trade. 13 period. Why a 13 period, Tyson? First of all, 13 is a Fibonacci number also, and 13 represents 1/4 of price action. Type in a Y or yes if that makes sense. Okay. So pound CAD, does anybody notice something? Anybody notice? This should jump out. Like this should, well, look at this last time right here. Look at this. Bam. How about this right here? Bam. How about this right here? Bam. You guys see it? Are you starting to notice these? Right? So this is more of a swing trade. So what would we do on this one? Technically, we're still waiting. Technically, if we're going to follow all the rules on this, we're still waiting. But when and if we get a close back into the Keltner channel, our target would be down to 61.11 or right about around there. Our stop could go above the closest pivot level, so our stop could go above here. And now I'm going to show you the formula I would use on my position trades. And this is most important is how I'm going to establish this with the formula of the grid. Now I'm going to establish the grid. And instead of using a 1 hour like I did with my swing trades, I'm going to use a daily, okay? So the daily, it's the same formula. I take the high and low range, which is 5,200 pips. Holy smokes. The last 500 days, holy man. This isn't going to give me many grids. 5,200 pips times 3 divided by 2 divided by 10. The grid needs to be 780 pips wide. Whoa. That's what it needs to be, though, using the formula. So that's what I'm going to do. I'm going to say, yeah, this is pure position. So just to make everybody aware, this is 100% position trade. All right. So this is not for one of those. Now, what is our target from current price? Our target's like 1,100 pips, right? If I just short right here down to the target, it's like 1,100 pips. So I'm going to say close all at 1,100 pips. My stop would be 1.7521. My target would be 1.6111. Sell both sides. Done. Now there's only 2 entries on this one because the range is so big, but this is the way that you could trade this with the grid. You could also, if you wanted to, you could also establish this instead of using a daily, use a 4 hour. And the 4 hour is not going to give you as big of a range, right? So you're going to actually have more grids. Type in a Y or yes if that makes sense. If you did that, you would establish more grids. So let me show you one more that is meeting the requirements using a 4 hour, using the 4 hour formula. Does anybody notice something? Well, once again, you had that right there. Okay, so yes, everybody should be noticing that we're outside. So if I was going to establish my grid right now, let's look at the range. I'm going to just use a 4 hour range. I'm going to say 1,200 and it's about 1,275. And you target traders, you know that Gary uses a lot of 4 hour charts for swing trades. So now the grid's 191 pips. So now what we could do is this. My target is going to be down. I'm going to go through this kind of quick. So I want you guys to be able to get with your education specialist. I want you guys to be able to start playing around with this as soon as you can, or once it's available. So, all right. So resistance. So our stop could technically be above here. I'm going to go a little higher than that. I'm going to say stop above here. Okay. So my grid needs to be 190 pips wide. So now what I'm going to do is I'm going to go both sides. I'm going to sell. What did I say? 190 pips. Rounded that to 190. What is my target from current levels? How much am I looking to make? Right around, I'm going to just say 1,200 pips, right? It's a little less than 1,200 pips. So I'm going to say close out at 1,200 pips. My stop is going to be, again, this is very much a position trade, 77.98. My target's going to be 158.59. I want both sides, 190 pip, done. There's a phenomenal position trade right there. My job's done. Type in a wire yes if this is making a little bit of sense. And most importantly, if you understand that I'm going to turn, if I took this position trade over the next year, I could fall asleep, and instead of making, if it goes down to that target, instead of making 1,200 pips, if I use the grid, I should probably make like 3,000, 4,000, maybe even 5,000 pips, depending on how it gets down there. This could literally be a trade that helps make my year if I set it up right. Pretty awesome, huh? How many of you want to get this in your hands? Type in ME, if you're not already a part of this. How many of you want to get this in your hands? I want to get this in your guys' hands. I'm gonna create a. I'm gonna email the account reps the settings or a template to the weekly and the daily. If you like this calendar channel, I'll email the your account executive. They'll be able to get it to you. If you already have an entry strategy like targets or leveling, use that. All right. This strategy is good. Those ones are just as good, if not better. So just use what you're already using. Most importantly, it's about the grid. So here's what I want to do. I want to go through this. We have the gift of the executives giving us 50 additional hold on one second. There it is. 50 additional seats to the live grid class that's coming up in May. Now, you don't have to wait until, you're not going to have to wait until May to get this, and I will get you the settings right away. But here's the most important thing. When you go into this class, Josh is going to go over a very specific position, swing, and scalp strategy. There's also a way that you can set this up even if you don't know anything. There's a way that Josh has created a formula that works on every time frame, whether you're a scalper or a swing trader position, doesn't matter, where you can literally go into any chart, do the calculations, and set up the grid and just leave it alone, and it has a 90% win rate. I'm not kidding you when I say this. You can literally go to any chart, not even do any analysis, set the grid up, and it has a 90% win rate when you use Josh's formula on any time frame, 5-minute chart, 4-hour chart, anything. It's awesome. It's absolutely awesome. Josh is going to show you it and teach more about that in the class. The class is going to be in mid-May. You're going to get, it's a 4-hour class. It's going to be taught specifically by Josh himself. You're going to get everything, manuals. You're going to get unlimited retakes. There are things that you need to know, though. Here's your expectations. Your expectations should be, just like the strategy I showed you just now, it's to optimize your entries and to double or triple your profits. Now, here's the thing you really need to ask yourself, or here's really the crux of the whole thing. Let's say over the course of the next 6 months, you make 5,000 pips in the normal trades that you would normally take. Grid traders will make anywhere from 2 to 5 times that if they took the same exact trades but placed the grid. So target traders, there are target traders that will make 10,000 pips in the next 6 months, maybe more. If you trade it with the grid, you'll probably make 20,000, 30,000, 40,000, maybe even 50,000 pips. That's your expectations, to double, triple, quadruple the amount of pips you would already make if you just traded it normally. That's the reason why I think this is unbelievable. This is like a must-have for everybody, because you're literally at least doubling maybe even tripling or quadrupling your profits that you would already normally make. So as a bonus, now I have been given the gift of not getting in trouble, so I'm good. I'm very happy to say that I'm not in trouble, so that's good. I thought I was going to be in trouble. I'm not in trouble because we've extended the bonus through the end of this week or 50 students. So it's either going to be 50 students, the next 50, or through the end of this week. But as a bonus for the first group of students that go into this, it's now 150 students, we'll get 3 months of 4-hour trading sessions. So every month Josh is going to do a fill in the gap session. It's a 4-month long session, just making sure that you are establishing the right trades in the right direction, establishing the right grids, and really fine-tuning your guys' understanding of the no-brainer strategy of how to define direction. Remember, it's 3 questions: direction, where to, where are you wrong? If you answer those 3 questions using whatever strategy you want to use, establish the grid, done. Go live your life. I got another question real fast before I go to this, but how much time does this save me? Honestly, if I establish these trades, do I need to be glued in front of my charts anymore, or can I just go, should I just probably leave and go and live my life? I should probably go live my life, right? I mean, it saves me so much. Oodles of time. Yeah, Lorena says oodles of time. I agree. So here's one of the, in fact, here is the biggest reason why I need every person in this room that is not a grid trader yet. If you haven't talked to your education specialist, even if you've typed in your number in other sessions but you haven't talked to them yet, I am imploring you, I am telling you now, type your phone number in with the word me now, because I just talked to Jeff, I just talked to the executives. This bonus of lifetime ownership is going away when one of 2 things happens: at the end of this week or the next 50 students sign up. For the next 50 students, there's already over 100 that have this for life. We're going to give this to another 50 students for life. Now, after that, you'll still be able to get it. I need to be clear on that. You're still going to be able to get this in your hands after that. The difference is this: you're only going to get it for about 3 months, and then after the 3 months, you'll have to pay a fee to get in the class, which is going to be a higher fee than the discounts I'm going to give you in a second. And then after 3 months, you learn the class, and after 3 months, you're going to have to pay a subscription or a monthly maintenance fee to maintain the grid, because there's going to be a lot of technology updates on this. Oh man, I forgot to mention this. I got it. I know I'm running a little behind, but I got to mention this. Okay. So the next update that's coming from the grid, guys, is this, and gals, is this. I don't even have to wait, so the Euro Aussie, we already said, well, the Euro Aussie's ready, but it's not ready to be triggered, right? We're not ready to trigger the grid yet. So you still have to be in front of your screens kind of to trigger this, right? The next update of the grid is going to have, watch this, this is coming soon, an activate button. And so I can set an activation rule to activate the grid once price closes inside of the band. And if it never closes inside of the band, it will never activate the grid. I am target traders. What that means is, let's say you have a target 500 pips away from price, but you're waiting for the RSI to go into the buy zone. Well, you don't have to be glued to your screens anymore. You just set it up to activate once the RSI goes in the buy zone, and it automatically activates for you. Jackpot. I'm telling you guys, it's absolutely awesome. It's amazing. So when you type your phone number in with the word bonus, you will potentially be one of the next 50 or one of the 50 that get this for life. If you decide to go forward, you'll get it for life if you're one of the 50. If you don't go forward, that's okay. At least you'll know. So I would actually, if I were you, I wouldn't let this webinar end without at least expressing some interest. Now, here's the overall cost of everything put together. The course, the manuals, the live trading sessions, the bonuses, and the lifetime ownership, overall value of about $5,500. Now, you're not going to pay anywhere near that right now. You're going to get, the next 50 is going to be able to get the early bird pricing. And I want you guys to look at this number, $19.95, and understand that this number here, you got to think about, what is my return on my investment? And I got to make this very clear. What is the return on my investment going to be? Well, take whatever number of pips your expectations are over the course of the next month, 2 months, over the next year, over the next 10 years, right? Because you're going to have this forever. How many pips are you going to make in the next 10 years? How many pips are you going to make in the next 5 years? Let's not even think that long. How many pips are you going to make in the next 6 months? If you're going to make 5,000 pips in the next 6 months, let's say you're a leveling student or a target trader, double that or triple that or maybe even quadruple that, and that is the return on your investment. That is what you should be expecting by doing the same exact things you're doing now, but now you're going to double, triple, quadruple your profitability. I believe every person in this room, and here's what I want to say. I want right now to encourage you. I want to tell you and challenge you to type in your phone number with the word me. When you do, it doesn't mean we're swiping your credit card. It doesn't mean you have to buy it. It doesn't mean that. What it means is this. It means you're willing to talk to your education specialist. We offer financing. We're going to do everything we can to make sure that this works for you. We're going to set the proper expectations, and you'll never have to pay a monthly maintenance fee for this ever again. You'll get it for life. You will be part of the group that gets this for life. But you have to you have to be one of the students. And I don't know, maybe the 50 will go by this webinar. I don't know. Maybe it won't go by this webinar. Maybe it will go all the way through tomorrow and the 50 won't be gone. So it's either the next 50 students or by the end of the week. But what I wouldn't do is I wouldn't play around with it. What I know is this. If you're in this webinar and you type your phone number in with the word bonus or me, then right now, that means you're on record saying you want to be one of the students. So then you go into a list of students that will get this for life if and when you decide to go into this. That doesn't mean you have to go into it, but I would at least, if I were you, I would at least go on record saying, you know what, I think if I do go into this, if we work out the details of it, I want to make sure I get it for life. So I want to thank those that have typed in their phone number. I want to encourage every single person in here to do the same. Jerry, I've got your number with the word bonus. Juan, thank you. Jerry C, thank you. I've got your phone number. Yeah, RSI can trigger it, Helen. That's a great question. RSI can trigger it. It's not done yet. You guys, everybody that goes into this strategy will get the update when the updates come out with the triggers and the ways to set it up, like with the Keltner channel RSI. You'll get the updates automatically. So Vincent, thank you. I've got your number. Adriana, thank you. Jerry, James, Joseph, thank you. I've got your number. The link was just sent out to Anna. You can use that also. If you want to just go on record, you can type your number in with the word me. Here's what I want to say, guys. I would not let this webinar end without at least expressing interest. Even if you're not sure, let us work with you. I'm going to get the Keltner channel templates for the daily and the weekly over to the account executives so they can send that out to you. What I want, though, is I want you guys to do this. If you already have a strategy you're using, then you don't need to use the Keltner channel strategy. Continue to use the strategy you're using, right? But just add the grids to it. That's very important. So, hey, guys, I'm going to end here. Here's what I want to do, though. Thank you, Sherry, Abdullah, thank you, Ong, thank you. So I'm going to end. I'm going to keep this open for 2-3 more minutes. I would encourage every person in here to at least type their number in. Remember, just have a conversation. See what we can do to get you in. Maybe we can work on some financing or something. I believe your expectations should be to double, maybe even triple or quadruple your profits that you're already normally going to make. What does that mean over the course of the next year, 2 years, 5 years, 10 years? I'll tell you this. I made 27,000 pips last year. I'm up, right around 3,800 pips this year. If I would have been using the grid, I would have been up almost 60,000 pips last year. So how much is it worth to me? Well, a whole lot. How much? I'd be up almost 7,000 pips this year. So I doubled my profit. So that's how much it's worth to me. And I believe it's the same value to you guys. So again, Derek, thank you. Kevin, Chris, Ong, Cheryl. Yeah, Ziv says, I can't wait. I'm not sure. Ziv, that's a good question. I know they're working on it. Everybody's excited for it. So it should be very, very soon. So, okay, guys, listen, I'll keep this open for a few more minutes. Don't let me shut down without typing your number in. At least express interest. Be one of the 50. Don't have to pay the monthly fees. Get it for a lump sum so you don't have to pay more for it, okay? All right, everybody. We'll talk to you soon. Have a great day. Thanks.